Boston and Massachusetts. Like you said, I studied economics, and my journey to get to founding Rocker was not the most planned thing in the world. I think I started my career. I come from a very entrepreneurial family, but I started my career in a very serious way, right? So I studied economics and then moved on with the intention of staying in the United States. So I found a job in economics that would sponsor my visa, and I kind of slowly but surely ended up staying. And that first job was really in a company that today I believe it's part of IHS Market. At the time, it was called Global Insight, and it's one of the most prestigious and oldest kind of market intelligence and forecasting firms. And they're probably one of the few companies that have, for many decades, had an actual legitimate sort of data business. So I started doing economic research for Latin America. That research spans sort of typical economic research plus forecasting that then gets sold sort of as data or as insights, right? To banks and big institutions, et cetera. So I started my career there, learned the ropes, studied more and more economics and predictive modeling, and then moved on to the consulting area where they did a little bit more of an applied use of those skills to help mostly big organizations, right? So I did consulting at that point for the CIA, the Center for Medicare and Medicaid Services. At that point, I was already in DC, where I lived also for 7 years. For some private institutions like Univision, and really all of that revolved mostly around data modeling and building of software and tools to practically use the data and the insights to actually manage day-to-day operations of very large programs like the disability program for Social Security or the reimbursement methods for Medicare and Medicaid. A lot of that, because we were in DC, ended up going to Congress and being reviewed by OMB, et cetera. So I learned a lot of in detail how the government works in many ways, and learned a lot of econometrics and forecasting, and also, as any good economist will tell you these days, you have to learn how to program and how to manage and deal with data. So that was a little bit of the first foray. After that, again, serendipitously, I ended up in DC in 2007. And for those of you who aren't as young, you'll remember the last financial crisis, which at the time was a very big one and continues to be, but maybe compared to the current one in its speed and depth, it might end up being just a blip in the radar. But it was a pretty harrowing event, and one where I think a lot of lessons were taught and learned. And at that point, I moved into this smaller sort of boutique consulting firm that was doing most very similar stuff to what I just described, but in the financial industry. And we were in DC, and because it was the middle of the financial crisis, we ended up doing a lot of work for the federal government, right? So I ended up being in the middle of the financial crisis, working for either federal government institutions who deployed the funds for the recovery, or those who actually received them, like Freddie Mac, Fannie Mae, Citibank, et cetera. So at that time, I had the sort of privilege of working for a lot of these institutions, including the U.S. Treasury, the Department of Agriculture, Small Business Administration, you name it. If they were doing recovery programs, if they were doing loan and guarantees, we were there, and did a lot of learning there, both from perspective of the technical aspect, but also learning a lot about how the economy almost really works, right? And a lot about policy and how those things interact. And the last kind of few couple years of that stint, I spent building an international development practice within that company, focused on access to finance type of work, where I did some work for the IFC and the World Bank in Pakistan, in Russia, Honduras, and other places. And again, I learned a lot. And one of those things that we learned during that crisis that still holds today is a lot of the innovation and a lot of both the actual innovation and the reason behind the innovation, especially in fintech, can be traced back to that that crisis, right? And at that time,
Gotcha.
being from an entrepreneurial family and having learned what the real effects of that was, and having learned how technology can really transform, that seed was kind of buried in my mind as to a new path that would be a little bit more entrepreneurial, and where maybe skills could be applied in a more sort of practical setting. And so, without knowing much what I was going to do, I actually ended up taking a year off and traveling mostly through Asia and Latin America, where I did basically a lot of traveling and sort of soul searching, if you will. And then on the way back, very serendipitously, I was going through Florida, where my in-laws live, on my way back to DC to start consulting again for the World Bank. And I was called by one of my partners, who's also related to me, my cousin, and Nabil, Herman, my other partners, and Brian were about to start Rocker. And we just kind of had a phone call where it basically said, I know you've been doing nothing. I've been following you on Facebook. I've seen your pictures. So why don't you come and join us, right? And that was kind of the genesis of Rocker. I'm gonna stop there. Maybe I'm sure you have other questions, and maybe we can shape the answers based on that. But that's essentially the background and how I came to be at Rocker, right?
Sounds interesting. So basically, you have this entrepreneurial spirit inside of you. So it's just the sooner or later things that you're going to do something, to start something on your own. So so you met the other two co-founders. Why did you guys kind of immediately agree with each other, and what kind of the blueprint of Rocker at the very beginning you guys were thinking about?
Yeah, I think honestly, I think we were lucky that to this day we were compatible as partners, and because we really were embarking on building something that has taken shape in time. Mm-hmm. But at that time, we really just knew a few things. We knew we wanted to participate in sort of what I would call a new economy. We knew there were technologies that were going to continue to change the world. We knew there was convergence between a number of technologies and connectivity. The conclusion there is one that is more obvious now than it was then, which is basically there's going to be a lot of people coming online, having access to the tools that will allow them to transform industries and solve sort of problems. And these problems are increasingly going to be solved from different parts of the world, not just Silicon Valley.
But that was kind of early stage, right? At that time, not so many people or not so many companies realize, the trend of the new economies and using of the technology and the data management and stuff, right? So
that's it.
Yeah.
That's it. So when we looked at it, we said, look, there's an opportunity here. We're all doers, right? So we've all traditionally been good at executing, and we knew the risk of any of these ideas is going to come in the execution. So we came up with a model that we've since tweaked and improved, but essentially the model was we're going to help entrepreneurs at that time, and now we help corporations and we help investors as well. But at that time, we're going to help entrepreneurs execute on ideas, right? And we're going to do it with a model that we call a hybrid model, where essentially we're going to put together an infrastructure, a methodology, and a way to mitigate the risk and increase the speed of executing these ideas. And we're going to share in the upside, essentially. So we ended up saying, look, we're going to create a portfolio of ideas. We're going to collaborate with entrepreneurs, and we're going to set this infrastructure, this methodology to work for them, to create what we call exponential value, right? So we started a little bit innocently, right? We started with a couple of our first entrepreneurs. Some of them are still around. Some of them were able to exit. Some, of course, failed. And we started tweaking this platform that has become what Rocker is today, which is essentially, as I was saying, a way of doing things, a way of validating problems, turning them into products, launching them, and then hopefully generating a lot of value for what is now our three main partners / customers, which tend to be entrepreneurs, corporations seeking to innovate and create new businesses that are technology, leveraging their own assets, and early stage investors who we basically for whom we offer essentially the same value proposition, but saying, hey, this is one way to invest at a risky sort of early stage with mitigated risk. All else equal, you should get better returns for your money for less capital, right? And we have a few special purpose vehicles we use for that. And essentially the whole thing revolves around leveraging that infrastructure, that capability of building things that we've built over the last 9 years.
Got you. Yes. So we had the interview like 3 years ago. So we went through already, like, what's the journey that Rocket has been through, right? So today we are more interested in, learning about the development in the last 2 or 3 years. And in terms of the main business part, I think that the biggest the major development is like, you're more developed into an inclusive a platform that can help to co-build not just the entrepreneurs, but also kind of like private institutions and also or corporations, right? So for that, we know that there are other co-build space. We have other organizations in the Miami, like Lab Miami, Venture City, and also we talk about other, co-builders in the United States, in Silicon Valley or Boston. So, but most of them are more focusing on entrepreneurs only. And there is like a handful of, doing this kind of services for like corporations, but Rocker, kind of being exclusive and, to include both sides. So what is the kind of the rationale behind it? So what do you think of that?
Yeah. So generally speaking, we try to focus on problems and solutions, right? So what we see is a lot of opportunities in especially software driven sort of innovation, right? So if you look at what we do, we don't do nanotech, we don't do biotech, right? We're very focused on software, we're very focused on software platforms and connected devices. And what we see is essentially, rather than kind of making a separation between a corporation or an entrepreneur as an entity that can produce innovation, we try to think of everything as an ecosystem, right? And it's in that vein that we've kind of very slowly, and in the last few years, moved towards opening up to corporates, because I think corporates themselves have also kind of realized that innovation and digital transformation are not the same thing. That if they don't disrupt themselves, they may get disrupted. They're a lot more open to sort of what I would call a methodology of experimentation and kind of a startup mentality. And they need help executing, but it is also true, and you see this countless sort of examples when they do it well, that they have the most assets to bear, right? And that they can become either great innovators or at least great platforms for others to innovate on, right? And I think it's that convergence between startups, between entrepreneurs and corporates that have the right culture and the right sort of setup to do this, where the real kind of value comes from, right? So we decided early on, hey, of course we've always worked with entrepreneurs. The corporate thing kind of happened a little bit more by happen chance almost, and we've kind of grown that into our own vision of how that should work. And the reality is, unless you're talking about really large corporations, there is not a huge difference between entrepreneurs, corporations, middle market companies that are family owned, for example. So there's a lot of overlap in terms of how these companies are run, in terms of, let's call it the target, right? So we deal with a lot of family-owned companies that are large, but where they may have an investment component on the family side, a business that they want to innovate with, and an openness to work with startups or even their own startup portfolio or set of investments. So what we found is that if we try to create a network and if we try to connect the dots within this network, it's a lot more powerful, right? So rather than saying, hey, we're going to focus on entrepreneurs or we're going to focus on corporates, we really just focus on the problems and on building the network, right? And that I think we've done with some success, and we expect to do it with more success in the years to come.
But how is, do you see the difference of methodologies or mentalities working with corporations and versus like entrepreneurs? Because I can imagine like corporations, do you need to interact with like different departments and, more like, to consider their context more holistically, versus like entrepreneurs more like, it's from scratch, ground zero, more flexibilities. So like, how do you see that?
Yeah, it's definitely different. We try to make it so, and we've been fairly successful with time at standardizing as much as we can our approach, meaning our approach always starts with identify a problem, with trying to justify that problem, following some validation, following the creation of a product and launching it to market. And what we've tried to do is do it in a standard enough manner that it applies to both corporates and entrepreneurs, that they both find value in it and that they understand. For corporates in particular, as you were mentioning, there are things to contend with, meaning there's multiple layers of bureaucracy in some cases, there's cultural barriers in some cases, but we try to specialize in essentially allowing them to do away with those barriers through leveraging us, right? And we find that when the company is ready for this, and when we find the right sort of point of contact, so to speak, this can be done pretty successfully. They have to be ready. The way we approach it is a little different, right? But the process itself is built so that we can actually justify the existence of a project through various means, including KPIs that perhaps corporate wouldn't be used to, specifically with the point of almost educating them and really having them understand, hey, if you really want to innovate, it's not necessarily a short-term thing. You're doing it for specific reasons. They have to be the right reasons. And we're going to allow you to have the roadmap and the set of KPIs and the way to measure it that will not only make sense to you, but to your boss and to your board, and to your family or whatever it may be. And that turns out to be very helpful. In the case of entrepreneurs, as you were saying, it's a little bit more flexible, but you'd be surprised, right? I think people who are entrepreneurial and entrepreneurs aren't necessarily process-driven people, right? So one thing is to have an idea and to have the wherewithal and the stamina to go with it, right? And another thing is to follow the right process. And again, I mean, process I use loosely when we're talking about startups and generally about innovation and ventures. Obviously, it's not a one size fits all, but there are ways to say, hey, look, let's focus on the right things. Let's experiment in the right way. Let's find ways to mitigate the risk of something that's inherently very risky, right? So we find that with entrepreneurs, sure, there are fewer levels of bureaucracy. There are perhaps a different way of communicating, but the essence of what we do, it's communicated in a pretty standard manner, and it applies to both. And I think the changes are really both more in the dynamic of the day-to-day management and how closely we work with different people and who's involved. But ultimately, we try to make it so that the value of our process and our infrastructure is seen by both and can be handled in a similar manner, right?
Okay, so question for you will be, among all the co-building companies out there, if an entrepreneur has idea wants to develop this project and they are looking for a partner, a co-builder to help them. So what are the key things you think that they should look into when they choose a partner?
Yeah, I think it depends on who the entrepreneur is and what they need, right? So oftentimes they're looking for capital first, and I would say that is depending on the stage you're at the hardest. Meaning, if it's too early of a stage, you're gonna have a hard time finding just capital, right? When it comes to actual sort of partnership and building, I mean, oftentimes you're gonna need somebody who knows what they're doing, right? So it's very typical that people say you need a technical co-founder, and that is true, right? Or you need some kind of technical acumen to make your life easier and to navigate that world. But at the same time, I think it's important to have someone or to have a set of people who kind of see beyond the product and beyond the idea and can be very sort of objective around how to make something into a business, how to leverage technology and some ingenuity to really try a proof of value proposition with the minimum investment possible, right? I think in today's world, especially when we're talking about technology, there's a lot of ways to validate things with your users and with your customers, right? So somebody who has that approach, which is more about, hey, let's validate, let's experiment, let's mitigate risk, let's use capital efficiently. Somebody who has that experience that goes beyond just building software, I think is invaluable, right? And I think is what often is going to make the difference between making something possible and not, and just wasting money, right?
Gotcha. Yeah. So, and with the both sides, corporations and the entrepreneurs, do you sometimes see the merge or the synergies? For example, at one side, the corporation is looking for certain projects, right? On the other side, that some entrepreneurs actually have idea that can be a good use, can be a potential applications of the corporations. So do you see this kind of connections between the both sides?
Absolutely.
The kind of the advantage of you?
Yeah, absolutely. So we have different ways of working, right? So we've built ventures from scratch with corporates that are either adjacent to the core of their business or even closer to that. But we also, of course, have worked with entrepreneurs and have built even our own startups in different industries, and have, for example, an insurtech practice that essentially does what you just described, right? So in time, what we found, obviously, it's like oftentimes entrepreneurs can take a little bit more risk, and if they are able to execute on something that a corporate wouldn't take a risk on, if they can make it mature, they can get it to the point where a corporate would approve it or apply it or at least pilot it, right? And I think we see that a lot, and we're big proponents of that, right? So we have companies in our portfolio and some of our SPVs, for example, that we then take to our investors, even the investors in those same vehicles or in others, to pilot in their companies, right? And we see some success in that. We have an insurtech practice that is almost exclusively focused on essentially finding technology solutions across the spectrum of the insurtech industry, right? So they even have an insurtech map that they put out with Chubb, and we use those to connect to sort of large incumbents. And if you think of insurance, it's one of the oldest industries out there. It's pretty old school in many ways, right? But very ripe for transformation, just like fintech is and continues to be, was and continues to be. So we increasingly see that opportunity, right, to either create solutions that are tailor-made for corporates where we collaborate with them, which we of course do a lot of, or even through our own sort of network, finding ready-made solutions that are sort of applicable to corporates, right? And that's something that increasingly corporates are looking for, both for investment and just for us customers, right? And something that I think is an increasing trend, and we didn't invent it, and you're gonna see it increasingly.
Awesome. Any big names that you can give us in terms of the corporation side that you work with?
Yeah, of course. So we, of course, I mentioned Chubb. We've worked with some of the big reinsurers like Munich Re on the reinsurance side. We've worked with Stanley Black & Decker, for example, which is a publicly traded company here in the U.S. Worked with M Financial, which is also a pretty large wealth management firm. Carnival Cruise Lines, and a number of pretty well-known Latin American companies. The second biggest supermarket in Ecuador, for example. Companies out of Colombia, Chile, Argentina. One of the biggest retailers in Argentina, etc. So yeah, absolutely.
Awesome. So because of that, so we also have a new division, which is the venture capital fund, right? Was it because of the ecosystem we were just discussing, that you see the opportunities, you actually have the capabilities and the leverage, to add this, investment arm to it, and to to your ecosystem?
Yeah, I think the thesis always was, how can we find and plug all the gaps necessary to build sort of successful early stage companies, and whereas we believe that the process, the methodology, the infrastructure and the execution are probably the most important. It can't be denied, especially in Florida, although that's changing, that there's always been a funding gap at the early stage, and this is probably not a just Florida problem, but between a seed or in a Series A, even there's often gaps, right? And those are often filled by a healthy kind of network of angels and early stage funds, etc. Something that we didn't see here in Florida. So we a few years ago set out to, with our partners, with Jeff, our partner, to create a venture capital fund that was successfully raised and has deployed capital both in rocker companies and non-rocker companies. And we started that a couple years ago.
It's a venture capital fund that open to any third-party entrepreneurs, startups.
It's a regular early stage venture capital fund. Obviously, we want to invest in what we call exponential technologies that are high growth. It is institutional in nature, so even though it's early stage, it's still looking for a level of revenue and a level of traction. And
Gotcha.
And we've since also worked on not just that fund, but also other alternative funding vehicles for even early stage, which is what I was mentioning, those special purpose vehicles and what we call venture builders, where we basically select different verticals like retail, for example. We're partnering with Dimas Jimeno, who's the ex-CEO of El Corte Inglés, and AI, where we have a number of investors, and we're working on 3 solutions in the sort of corporate enterprise software spectrum. And we've kind of taken to that as another alternative way to sort of plug a funding gap at a very early stage and produce an interesting alternative for angel and early stage investors to invest in vehicles that are run by us, which essentially means, at least from our perspective, risk mitigation and better chances of success. Right?
Awesome. So how many companies so far do you have in the portfolio? Do you know? I understand it's a separate.
We've historically built over 50. In the portfolio today, we still have 20. We've had a few fail, some exit to public corporations and being sold, others that are just still around and growing. And today we manage a portfolio of around 20. About half of those, maybe a little bit less than half, are in the early stage and even in the Cobuild stage, what we call the Cobuild stage.
Mm-hmm. Gotcha. Awesome. Yeah. So it seems like, companies doing great throughout these years. But I also know that you actually privatized the company. It was public, and then you privatized it. So what's the reason for that?
Yeah, essentially, so we a couple years ago decided to do an experiment in going public, and we did it through what's called a reverse merger and went into the public markets. And we did it because we thought at that time that the value proposition I just described, which is basically if you think of Rocker as a diversified way to bet on early stage companies and ideas, along with the revenue that comes from consulting and working with corporates, we thought that would be an interesting sort of proposition for the public markets, meaning that we could generate some of that funding that I was describing, that funding gap, through the public markets, and really take to the public markets the idea of generating sort of exponential bets, right? However, over time, we found that due to reporting requirements, the cost of being public, the number of things that people always, talk about when they talk about going public,
right.
Essentially our business model and the way we generate value and the way we convey it was not entirely compatible with being public. And that has to do with just reporting requirements, but also with the cost of, for example, auditing certain valuations that in the private market can be addressed differently. So essentially, due to many reasons that I'm not going to go too deep on, we decided last year or earlier this year to go to our investors and propose to re-privatize the company, and we have successfully done that. And instead, we focused on finding ways to offer liquidity and kind of interesting alternatives through technology, right? So we've joined a platform where you can create a secondary market for our shares. We've worked closely with our investors to really pursue a path of an alternative, right? And that's been fairly successful, and we think that's the future, and we think we can do that with our entire portfolio in due time. So that's what we're pursuing, instead of trying to sort of really force ourselves into the public market, which was not, in retrospect, the right avenue.
Awesome. Totally understand. So, in terms of the Miami tech community, so you continue to grow, and you will always seek out new entrepreneurs and new projects, and also whether it's for co-build or it's for investment. So, could you share with us how do you choose your entrepreneurs or projects when doing whether it's for investment or whether it's for co-build? For co-build, you still need to put your resources on the project, so. Yeah. It's kind of similar things, right?
Yeah, so we have a process, right? So the process, I would say there's two parts, right? So one is coming up with the idea or the problem to solve, right? And that typically either is brought to us by an entrepreneur or oftentimes with corporations, what they bring to us is problems they have, not necessarily ideas, right? So in both cases, what we do is basically we run through a process of understanding what real problem or pain point is being solved, validating with users what it is exactly that's being what we call the unmet need, then taking that and building it into what could be a product, right? So when we're looking at entrepreneurs, the first thing is we focus a lot on the problems, less on the team in the beginning, right? And if it's an entrepreneur that brought an idea to us, what we essentially do is make sure the idea is sound, usually make it better, and come up with a plan and say, look, under these conditions, with this type of characteristics, we think this could fly, right? And then we present it to them and say, look, the way we would partner is if we do this exact plan. And if they don't feel like that's the right plan, then they're free to move on, right? And if they do feel, then what we do is we basically support them, right? And this can take many different shapes, right? Oftentimes we have entrepreneurs who actually act as the CEO. Other times they don't. Other times we have an honest conversation about their time constraints or requirements or their own fit for the job. And we might conclude together as partners that we need to hire someone, right? To execute, right? Which we do as well with corporates. So then that's the second phase, which is essentially building the right team. And building the right team is what you would expect would take, right? So we luckily have a brand. We have a lot of talented people who apply to us. We try to match those people with the opportunities we have. And then we support them with our own team to basically execute in the best way possible the 2 or 3 things that we think are key for every project over the first 6 to 9 months to make sure they have wings, right?
Sounds good. Yeah. So more you are looking into the problem solving part as a co-build partner. So because typically if you look at entrepreneurs, some people will say, it's more important is the entrepreneur, the team, the people, and some would say it's the industry, the timing for doing the project. So it varies from different investors or different point of view. So from your point of view, will be the key thing will be the problem solving, right? So
they're all important, and they're all important, as you say. But basically, what we try to solve for is we say, look, if we have a good enough problem that merits the risk, and we have a way that we've come together after looking at over 200 ideas in our lifetime to bring it forth, then we feel pretty comfortable that we can mitigate the risk, right? It doesn't mean that the team is not important or the CEO is not important. It means that we can find them in due time and that we have the capability to execute internally so we can give that project wings. So the equation of a typical sort of angel investor or VC changes a little bit in our case, just because we do have that capability and we can buy ourselves the time to prove the value proposition to some degree before we start worrying about, hiring a team of 7 people and the legal aspects of it and a bunch of other things that we can essentially skip in our first, 6 months to a year to really, instead of that, focus on really proving a value proposition and verifying that the problem is actually the right problem and that the product could work, right? So we have a little bit
Got
of
it.
a hybrid there, and that is part of our value and our magic, which is basically we can. It's not like we don't have to make those decisions, but we can postpone them until there's further evidence that this thing is going to work, right?
Gotcha. Okay, sounds good. So, so there are two other questions that I would like to ask you. One is, what do you see the Miami tech community? What's your view on that, and what do you think of the future of that?
Yeah, I think, look, I mean, we've been lucky to be a part of sort of that surge of entrepreneurship and technology in Miami. I think compared to 9 years ago, we've come a long way, thanks to people like us and others, right? So you were mentioning a lot Miami and Venture City and others. I mean, look, this is a very different. I think we've still got a lot to go, but this is most definitely a very different scenario from when we started. I think a lot of things have come into their own. The sort of connection with Latin America, which was always there, has become a lot stronger. And we've been able to kind of, with some degree of success, I would say we still need to work more on it. Sort of start focusing funding opportunities and sort of ideas around this tech ecosystem, whereas before maybe all you could expect in Miami was people investing in real estate and perhaps other more traditional businesses, right? So I think it's come a long way. I think it's still got some ways to go, but I think if you look at the people, for example, who've moved here, right, you increasingly see people who've succeeded in Silicon Valley and other places, who've sold their businesses, who've invested, who are investors, who had funds, moving to Miami for various reasons. But that, of course, has completely changed the sort of the context of where we're at. And I think we've definitely improved a lot and developed, and I think we have a lot to be proud of and also to work on. Right?
Sure. So there are kind of discussions, right? Some people saying, especially for startups, they're saying the biggest challenge for Miami tech community is lack of funds, right? And the other side, people saying is because of lacking the talent. So what do you think comes first, or what do you think is more important?
A very typical sort of argument, but it's almost there's no end to that argument. I think. I think there's definitely like what I was calling that funding gap, right? And like, look, early stage is hard, right? So the funding gap is not just there because people are mean. It's there because it's hard to find, vet, and validate early stage ideas, right? And I think to do that, there needs to be not just a healthy sort of angel network and people willing to invest at an early stage, but there needs to be a healthy way to take those investments to some kind of return or liquidity, right? And I think if Silicon Valley struggles with that, well, more would we, right? And that's just our reality. So yes, there's always going to be a funding gap. I think one way to fix it is to really figure out how to create better chances of success for early stage ideas, which is essentially what we've spent the last 9 years trying to do.
Sure.
And then the talent thing, I think, also goes both ways, right? I mean, like, the typical thing people say, which is also true, is, for example, FIU is something like the second university with the most computer science degrees. Do they all stay in Florida? Probably not. Is that enough? I'm not sure. What I can tell you is increasingly you see a lot of very talented people move to Miami for different reasons, or to South Florida. And that is changing. But I think that sort of discussion of funding gaps versus talent, et cetera, is always going to exist because it is inherently a risky thing, right? And when you're creating things from scratch, of course, there's going to be a lot of on the one side risk, but on the other side, it's hesitation, right? And we perhaps need to better create an angel community and an educated one at that. But at the same time, it's always going to be a risk, and I'm not sure any of those statements are completely true, but I do think it tends towards getting better. I think the talent discussion is different, perhaps depending on where you compare it to. It may not be up to par, so to speak, with other cities that may be more developed, but I think that's also always going to be improving, but never fully solved, right? I guess is what I would.
Gotcha. Awesome. So yeah, so the last question to you, we usually ask our speaker. So what's your advice to the entrepreneurs and startups in the community from your experience as entrepreneur yourself, and also you have seen, tens of entrepreneurs out there. So what would you, what advice would you give
Yeah.
to the community?
Look, I think as I was saying, right, focus on problems, right, that are the right problems. Focus on, in my case, technologies that are exponential, meaning you want companies that can go quickly, and like I said, opportunities that merit the risk. But more importantly, maybe and more tied to the moment, right? As I was telling you before, um, my career sort of took a turn during a pretty big crisis, right? And I was lucky because I was in the right place at the right time and
Right.
ended up learning a lot, right? And doing okay. But if you think about that crisis and what came out of it, there was a lot of innovation and opportunity. And some of the companies that made it big, especially in fintech, kind of had their start then. And I think we are at another one of those moments, right? So whatever we think of 2020, and how hard it's been, and of course it's been very hard, and I count myself as one of the very lucky people. This could have been a lot worse for myself, but it's undoubted that there's going to be a lot of opportunity, or there is a lot of opportunity. So if you are able to and have been waiting on the silence to be an entrepreneur, or you're looking for a moment of opportunity, I think this crisis is going to open up, or has already opened up multiple ones, right? If you think about what's happening in Latin America, for example, where we're doing a lot of work, something like 13 or 14 million people did their first online purchase ever in Latin America, right? That's huge. That's huge, and that's just the segment of the population that can use Mercado Libre or Amazon, right? That's not even going down to the rest of the population, where there remain amazing opportunities to innovate, right? And you're seeing this people coming out of the woodwork truly innovating at a pace that perhaps has accelerated very substantially, right? And there's an urgency both from big corporates and entrepreneurs and everywhere to really make some changes. So one thing I would say is, like, this is a great moment to innovate, and there's a lot of opportunity, and there's a lot of good reasons to be an entrepreneur now, right?
So do you see more or less projects during the last half year?
We've seen different ones, right? So I think for obvious reasons, for the period from March to, let's say, recently, there was a lot of hesitation on the part of corporates to engage in new projects. What we did see is the projects that were already ongoing became more high profile and important, because the projects that were ongoing had to do with digitizing services, creating new ways to go to consumers, et cetera, et cetera. So those obviously took more importance and continued. And then what we've also seen is that in an environment where, there was already a lot of liquidity, and we're looking at increasingly decreasing interest rates, right? People who didn't get completely hit by the downturn, the initial downturn in the market, are looking for places to place their money. And this was true before the crisis, and it continues to be. So what we've seen is a lot of interest in kind of our special purpose vehicles and investments, right? Obviously from certain specific groups. And what we've seen is kind of like on the fundraising side, it's been challenging. I'm not going to say it wasn't, but we're also seeing that for the right niche, for the right opportunity at the right moment, for the right investor, there's a lot of growth there to be had, right? So we've basically turned around and kind of focused on very relevant problems for the moment. Like, for example, I was talking about e-commerce and solutions in what we call social commerce. We've started a company basically because of the pandemic. We decided to start our own internal company that focuses on that for Latin America, and we've been able to successfully raise money there. We've focused on AI solutions for e-commerce and other corporates that we were already embarked on prior to the crisis, but they took a little bit more importance for some of those investors, where they doubled down into them because they applied to their own companies and their own kind of lives, right? I think it's changed a little bit. The flow itself has luckily stabilized and kind of maintained the same pace we were at prior to the pandemic.
Great, great. Yeah. All right. So now I'm open floor to audience. If you have any questions.
Yes, we have a question from Kevin Webb. Of the 10 different criterias of exponential organizations, which do you think are most important, and how does Rocker 3 embody those criterias?
That's a great question. I think if you think about those criteria, they're basically, I think they're 14, but they're basically, some of them are more internal facing, some are more external facing, right? So on the internal side, you have things like dashboards and algorithms and sort of social and community building, right? And we at Rocker, of course, use all the tools you could expect a company like ours to use, from Slack to Jira to a number of other things to communicate with each other and maintain sort of like that social connection. But we're very strongly believe in automation and in dashboards, right? So even as we speak, and we have for a number of years been building our own operating system for building companies, meaning when we start a company, we actually, first thing we do is spin it up on our system, and really from day one be able to measure anything from the financial side of things to the execution of the process itself as we do company building, hit milestones, et cetera, et cetera. So we spend a lot of time and effort and kind of investment in making ourselves that type of dashboard driven, data driven company, which is a big piece of the exponential organization thing. And on the other side, on the flip side, on the external side, when we are building startups, we try to leverage at least 3 or 4 of the 14, right? Obviously, an MTP is to us the most important one, meaning the massive transformative purpose, which is the sort of reason to exist that is all-encompassing enough to basically allow a very, very ambitious mission. And we think that's important both from an internal culture perspective, but also as you go out and raise money and sort of grow the company. But the other sort of components that tend to be important revolve around leverage assets, for example, and staff on demand. So when we're talking about leveraged assets, a good example is Airbnb, right? It is the biggest hospitality company out there and doesn't own any real estate, right? So oftentimes, when we're working with corporates, for example, or when we're working with entrepreneurs, we are proposing a world of leverage assets, whether it's their own or someone else's. What we're proposing is essentially technology-focused businesses that are asset light, where these concepts of leveraged assets, staff on demand, and a number of other things tend to be relevant. So I would say, because we're in software and because we are in a certain very kind of specific world, we tend to revolve around leveraged assets, staff on demand, and maybe a couple others that escape me right now. But generally speaking, they're all important. And what we try to do is, as we do our analysis of an idea and as we kind of select the sort of plan of attack going forward, we try to at least be able to support to ourselves and to our partners that there are 3, 4, or 4 of those that can be given once we execute, right? And that is more important as a whole than just saying one is more important than others, right? What's more important is as a whole to be able to believe, hey, this has the possibility of becoming exponential. And from the get-go, we're going to at least identify 3 or 4 of these that we can hit quickly or within, a reasonable amount of time.
Oh, thank you. Alicia wants to know, do you need to be an accredited investor to participate in your investment vehicles?
Depends, but mostly yes. I think, I would say that the shortest answer to that is yes. There's a couple vehicles that do not require it, and a couple vehicles where some unaccredited investors are allowed, but it's kind of on a case by case basis. We pick sort of like what regulation we're gonna abide by and do it. So I would say more often than not, yes, but there are exceptions, and there have been exceptions.
So how does a typical person participate? How do we know what's available?
So if you go to our website, there's a venture builder section where we describe some of the venture builders we're in. and those are the special purpose vehicles I was discussing. Today, very specifically, we have an AI-driven one where we're doing 3 solutions that will soon be starting to raise money on their own, separate companies. And then the e-commerce one I mentioned is not yet on the website, but it will be soon. And then the rest, I think the easy way is to contact us through our website. Everything is there, but we also have portfolio companies that are also on the website, by the way, where we often raise money directly into those companies, right? So I would say if anybody's interested, the first place is the website, but I'm more than happy to give out my email and follow up and sort of walk people through the opportunities and how it works and what the requirements are or may be, or and also figure out what may be more compatible with their investment style or their thesis.
Okay. I think that's it for the questions from chat. Yep, that's it. No other further questions. Thank you, Juan, for taking the time. Joan, you want to wrap up?
Yeah, sure. You can go ahead. Do you have any announcements for the recent activities or etc.?
Well, next month, it's actually Black Leaders Month. And so we actually have 2 events. We have a fireside chat the 29th and also a workshop that's going to follow the chat. And then in November, we actually are going to be the sponsors for Global Entrepreneur Week. So we're putting together a list of events from our local partners to kind of highlight it. And it's going to be a statewide event this time for Global Entrepreneurship Week. So what we're doing is we're collaborating with all the chapters in Florida, all the organizations in the state of Florida, and we'll put on one big virtual event for that whole week. So you will actually be able to attend events in Jacksonville, attend events in Tampa, anywhere in Florida. It'll be posted in one portal, so you'll be able to get a little feel of what's happening around the state when it comes to entrepreneurship and innovation.
Sounds good. And so welcome Rocker to join us for the event, participate in the event. Okay, yeah. So thank you very much, Juan, and it was our pleasure to have the chat with you, and we learned so much about Rocker, about yourself, and I really appreciate that. So we wish Rocker the best going forward, and yes, thank you.
Absolutely, thanks again for having me, and it was a pleasure speaking to you, and good luck going forward.
Thank you. All right. So good night, everyone, and hope to see you next month for our Black Leader Month.